All right, welcome to another Learning About Loans. Today we got the early reverse mortgages. Truth be told, Earl and I just got done doing a segment about reverse mortgages and how there can be a lifesaver, truly. Put somebody to where they can stay in their home and they thought otherwise wouldn't be able to happen. And one of the myths we wanted to dispel today, you gave two, which were really important. One is the bank will never own your home. Well, I shouldn't say never, but
Correct.
does not own your home, right? If you don't pay your property taxes or something like that, then maybe that's a different story. Somebody's going to own it. But the reality is, you said life rights. The reverse mortgages have life rights. So explain to me, Mr. Earl, what does that mean, and how does that apply to reverse mortgages?
So, thank you for having me again, Mark. So, the nature of the statement, I must preclude it by saying it must be owner occupied to have life rights. So, if you're no longer able to live in the property and you must go to a nursing facility, at that point, the life rights are over because you no longer occupy the property.
So just to
So
be
as
clear, for
long
those
as
that
you're
don't,
able, as
yeah,
long as
so just
you're
to be
able
very
to
clear,
occupy
reverse mortgages are for primary homes, right? You can't get a
only.
reverse mortgage, right? So in order to get a reverse mortgage, because it's different than a forward, right? If you don't know about reverses, we got videos around here. You can go check out the details, but they're only for people who occupy the home. So to your point, Earl, let's just say somebody aging does need additional assistance that they can't get at home. They're then moved somewhere else, wherever they go. At the end of the day, they're now no longer in that property. They can still have the reverse mortgage. Is that right, Earl? Like the reverse mortgage is still in place. Everything stays the same in terms of terms. Is that correct, Earl?
That's correct.
Okay, so the only thing that would change is when they vacate the property, when they no longer live there, the life rights or the rights to the property after passing, that's what we're talking about today. Is that correct? I just want to make sure I'm understanding what we're talking about. Is that correct?
Yeah, so either a doctor writes a letter stating they can no longer live in the property, and care for themselves, or under respite care, they can't come in and care of you. You must be hospitalized. If a doctor writes that letter, that is option. That is one way of non-occupying. The second would be, unfortunately, passing away. Either
Hmm.
way, the family or the estate of borrower Mr. or Mrs. Jones would be able to exercise the estate by either liquefying it, refinancing, etc.
So hold on one sec. Okay, so let's just take this isn't a real scenario, but I'll say it. My dad's fortunately alive, health, all those things at this moment. But let's pretend I have my dad, and my dad has his house. He has a reverse mortgage on his home. Dad decides to come live with me. Or just, yes, he's getting older, but wants to see more time with the grandkids. He wants to, just we can accommodate his needs in that instance. So I don't have the doctor's note per se. He's not going to a nursing facility. Is he allowed to still keep that reverse mortgage on his home now that he does not occupy it and he's moved in with me? Well, how does that work in the reverse mortgage world?
Well, then that would be his choice. He's giving up the
Right.
property. So I was answering earlier what
Yes,
mandated.
I'm going two
I
different directions on you,
apologize.
but no,
So
no,
if he
you
chooses to
correct me.
move, he
Yes.
chooses to sell the home and buy a smaller one, chooses to sell the home and give you money to make an in-law suite or what have you. That's his choice. So once he chooses to vacate the owner-occupied property, then the reverse mortgage must be addressed either by way of refinancing or by selling the property and paying it off.
I don't think I knew that. So, in other words, if in my scenario that I just presented, because you were correct, you answered my original question, but I'm changing this on you. So, if he's there, my dad is somewhere in his home with a reverse mortgage. We choose to have him come to live with me, to take, said for all the reasons I mentioned, because it's his choice to leave. Reverse mortgage is now going to say, "Yo, we no longer want we don't have a valid reason for reverse mortgage on this, so I can't keep that property. We can't rent it out. We can't do all this stuff." With reverse mortgage. We can do all those things. You just have to somehow replace the reverse mortgage, whether it's pay off the mortgage in cash or refinance it out of a reverse mortgage. Is everything I said accurate and true and correct?
It is absolutely.
Perfect. Okay, so now going back to the life rights, what you were stating, Earl, and that's why I was like, oh, this is again, that's why we do these videos so we can all learn together. Life rights means if in my scenario, that unfortunately, with a doctor's note says he cannot care for himself, we do have to place him in some sort of assisted living or different facility. He vacates the property. In that scenario, we are allowed to keep the reverse mortgage on the home. Is that what I understand? Is that accurate?
No, once the doctor deems that it's medically necessary to leave the property and go into full-time care, he is no longer an occupant of the primary residence.
Right.
And with that, the estate or the family would have to decide what they're going to do to pay off the reverse mortgage. He's no longer an occupant of the property.
I see. So no matter what, with the exception of death, right? With the exception of death, if he's not in my scenario, if my dad's not in the property with a reverse mortgage, we have to address that reverse mortgage. We either got to pay it off in cash or refinance it, or sell it, but that's paying it off, right? So we can either sell it, refinance it, or pay it off in cash, no matter what the reason, unless it's death, in which case death is what we're talking about with the property, the life rights. Is that correct?
Yes, sir.
Okay, so now let's take the scenario. So dad is gone, whether how dad is gone, whether it's by choice or by doctor, we got to get rid of the reverse mortgage. Now we're going to take very unfortunate, hopefully sometime scenario long from now. My dear old dad has now passes away. He's living in the home, he passes away. Let's just say he's survived by anybody, wife, spouse, or anything of that nature. So he's a single man at the time of passing. And he was the only person on the mortgage, only person on the reverse mortgage. What now? So the life rights you mentioned, what happened? So he's now gone. The reverse mortgage exists. What do we do now?
Well, so this comes with a beautiful caveat. Anyone in the DNA tree of dads, right? It could be a first marriage, second marriage, niece, nephew, in-law, children of the in-laws, etc. If they can prove that they have a relationship, a family relationship with dad at whatever level, they can refinance the house at 95 up to 95% LTV at the appraised value at that time. So they could pay it off by refinancing it, and let me be clear. The word refinance means you are an owner of the property and you don't have the costs to purchase. So we save anyone in the family lots and lots of money in closing costs. They don't have to come up with a down payment. We save them that. And they're able to refinance the property, if need be, up to 95% of current value.
Interesting. Interesting. So that is the difference. And by the way, I rather than you tell me, you said DNA, but I'm going to replace your word with the family tree. Anybody on the family tree, a
Okay.
branch, a leaf, a twig, doesn't matter. If there's some relation that you can prove and validate, then that one person or because at this point dad's gone, the house is going to probate, estate, whatever it is, however that's set up, but anybody can hop in as family related to refinance the house. Again, the bank does not own the house. And by the way, the bank doesn't want your house, right? It
That's right.
doesn't want dad's house. And it's
Never.
like they just want their money. So as long as dad's not there, you do have that's the life rights, is you have the ability for being a member somewhere on dad's tree, family tree, you have the ability to keep that home and it's not a purchase. Do they, when they refinance, Earl, can they use anybody they want to do that refinance? If they got a relationship with their bank, in town or wherever they're at, and they want to use their bank, and they refinance that with anybody, or do they have to go through something special because it's a reverse mortgage?
Oh, they could use anybody they wish.
Anybody you want. So it becomes a quote
Anybody they want.
normal air quotes again, normal refinance where they can use to any mortgage person of their choosing, mortgage banker, mortgage broker, whatever they want to do. Or they can pay cash, right? They can just say, go away and we don't want this debt on the house anymore, up to 95%. And so I think
Yes.
that is huge. So life rights means, again, it goes back to your original your two statements in the opening piece, the two pieces you emphasize, because again, this is a misconception. People think the bank can someday own the house. And then secondly, it does have life rights. So if and when the occupant vacates the house, whether it's by choice, or it's not by choice, or whether it's through passing, in any of those scenarios, the reverse mortgage does need to be addressed. The life right says when the mom or dad passes, again, the bank does own the home, any family member on the tree with legal rights, obviously, right? Because there could be, you got probate and all that other stuff. but they can refinance and keep the house themselves.
Yeah, let me simplify it, right?
Please.
So Johnny, grandson Johnny. So life rights meaning that dad lived his life in the house, whether he had money available or not, whether he only exercised, the payoff of a loan, or whether he used every single penny it was available, and he hasn't any more money left. Dad can live in the property until he last breath. And then, of course, that is what I'm addressing as far as life rights for
Yes,
dad.
life rights.
Money or no money available, doesn't matter. Nobody can move unless a doctor writes the note. That's it.
Mm,
So then
love
the,
it.
the family tree, right? So the lowest hanging apple on the tree wants the house. Loved grandpa's house. I gotta have grandpa's house. Well, we put them on a deed for $1. At least that's what we do here in New Jersey. I'm assuming Texas is the
Sure,
same.
we'll go $2 in Texas just because we're Texas.
Okay, $2 in Texas. So you do a deed in Texas, and now they're an owner, which gives them the ability to refinance the property.
Wow.
And then whatever the value is, let's say the reverse mortgage went on for 30 years. Dad had a great life, 105 years young. He passes away, and I mean, lived life to the fullest. And now maybe it was a $300,000 loan. The property is only worth 200,000. Well, the PMI pays the difference, and the grandson or granddaughter gets to refinance the property at today's value of 200,000.
Whoa. Okay,
Yeah,
Earl, that is massive. So let me restate what you just said, because I think that is something I did not know. So dad lives to be 150. Don't care. You pick whatever number you want. Dad has a reverse mortgage, does not make payments. Like this is huge. Dad's balance doesn't matter what it is. It goes up to $1 million. He lives to be 800 years old. I don't care. It's $1 million balance. But if today's value on that house, let's use your number of 250, is today's value, dad passes. So the reverse mortgage company who made that deal that now has $1 million debt because dad lived to be 800 years old, it doesn't matter because that mortgage company, they get made, whether they get made whole or not is not the heir's problem. All the heir really has, the real benefit is the heir now has the ability to refinance the home at the 250 value, current market value of 250. The heir doesn't need to worry about the $1 million balance. The heir just needs to refinance up to 95% of that 250. Is that what I'm hearing?
yes, sir. It's a non-recourse loan because the PMI covers the overage.
Holy smokes. This That so that really eliminates the man, Earl. I'm sorry, we've talked a handful of times. I know about on similar topics like this. I had no idea that even if they go over, because I always thought the kids just had to walk away from it. So in my example, Dad's 800 years old. He's Moses, right? He's living to be for an ancient. So Dad's 800 years old. Dad passes. I just thought the kids had to say, well, that's too bad. That 250 house has $1 million debt, and I thought they just walked away. But you're telling me that's not the case. They still can go in and still refinance it at the 250. The bank's made whole through their mortgage insurance, and the kids still have access to the house, access to refinance the house if that's something they want to do.
That's correct. And even
Wow.
better, the only way we can give a clear title to a new purchaser, if there isn't a family member who wants the property, and selling it to Jane Doe, brand new person in the mix, the title gets cleared because the PMI covers the overage. So they get a clear title when they purchase the property and start off anew at today's value.
Earl, I always thought reverse mortgages were good for person. All of a sudden, the right person category just got a lot bigger for me. Because again, and this is the part you and I have had these conversations, today's rules and regulations behind reverses are different than they were 15 years ago, 20 years ago, when they first got real popular. And I know they've been around longer, but I had no idea that, I mean, that's free money. So if dad lives to be 800 years old and doesn't pay a mortgage payment, good for dad. Like that's just good for him, right? That's
Yeah.
incredible.
So,
Earl,
one of the things I say to people is, I'll say, Mark, Dad needs 1,500 a month to live in his property. You want to send him a check for 1,500 a month? And Mark might say, no, I'm building my
no,
retirement. I'm
thank you.
raising my family. I don't
Yeah,
have
I got private school to pay for.
right? So then we say, okay, let's talk about using the equity and let's give him the quality of life that he deserves. Let him retire and let him age out of his home with dignity, not relying on one of his children to pay his bills. And I can't tell you the amount of relief when I sit in front of a client and tell them, you now can do this self-sufficiently, and you don't have to ask your children for one penny.
Yeah,
And they look at
yeah.
me with this great sense of pride that they're not a burden on their family and they're able to live out their golden years independently.
That's wild. Earl, I think I learned something every single time. I'll let you know that you don't, but every single time we're together, I learned something amazing about this. This is what an incredible product. Any closing argument? I mean, like I said, I think we kind of hit it, but just in case, anything else to add to this before we're off?
Not that I can think of at this moment.
Love it. The Earl of reverse mortgages, man. As always, appreciate you and appreciate you for watching. And we'll see you on the next episode of Learning About Loans. Thanks, Earl.
Thank you, Mark.